Hi, I'm Andrew Roberts. I'm here today with Z Razak, and we're going to be talking SSAS pensions. Everything you need to know to get started in SSAS.
Don't you love it? Andrew's come as a guest and he's introducing the video. This is how mad this video is going to be, and this is why we love it. So this is a big shout out, my name's Z Razak, to the LinkedIn family and the YouTube family, which are going to be loving this content. And we're going to get really into this SSAS pensions by asking each other questions and how we help property entrepreneurs, especially on the journey. You can also help trading businesses, because SSAS pensions can be anyone who's got a limited company. I think that's a good little start off. So Andrew, where were you come down today?
I travelled down from Northampton today, and it's great to be here with Z. Z is one of my commercial property mastermind students on Ranjan Bhattacharya's commercial property mastermind. And I always find that the sessions I have with you brilliant, because I'm delivering all of the property, the entrepreneurial, the different angles on it. As a chartered accountant myself, I do deliver a little bit of the tax on there as well. But Z always comes up with a little twist or a nugget that gets the whole group going. So Z, tell me, SSASes, why should somebody have a SSAS?
As anyone following us on, especially in LinkedIn, predominantly knows, I'm a huge fan of SSAS pensions. We've got some videos on there, but this is going to go into some quite deep aspects of it. Why SSAS pensions? They are an entrepreneurial tool that you can only have if you're really a limited owner of a limited company and a director, and they are a company pension scheme. And the beauty of these tools are potentially you can take about 12 million outside tax. You've heard me, 12 million, and we can use them as an investment fund, not like a traditional boring pension. And I think that's the big difference maker, and that's why I get really excited about this stuff. Even though I've had some great food, which Andrew will know about, I've got him ready, make sure he got him the incentive, and the missus is the key driver for that.
Top food.
You're not falling asleep ready though.
No, top cool. Food. But let's go back. You've said there's 12 million. I mean, pensions, we retire between the ages of 65 and 68, depending on age, etc. So surely if I've built myself up this commercial pension scheme that we're talking about, which we know you can drop in your commercial property in there, you can't put residential in, but you can put commercial into your portfolio. Surely I've got to sell all of that property when I get to 65 and buy myself an annuity and basically live on a derisory income for the rest of my life off that annuity. Is that a myth or is that fact?
Very good question, and this is the big difference between a SSAS pension and a traditional pension. SSAS pensions, like many pensions, is actually 75 is the age that you're supposed to change potentially to annuities, but those are for traditional pensions. SSAS pensions are not included in this because that you are the master trust, so you're not determinant on someone else's show and they decide, you decide, and therefore annuities are not in the bracket if you don't want them to be, and that's the big difference maker. You mentioned about 12 million, and what I mean, because you can have 11 members, and if you look at the current threshold, it's about 1,073,000 with a bit of change, and if you times that up, that's how you can use it. The other big benefit why you want that is inheritance tax. They are an amazing tool to pass intergenerational wealth. To be honest, it is the biggest and most privileged tool in the UK.
Now, you said something really that was quite interesting there, Z. I mean, number one, inheritance tax, but we'll come back to that, so stay tuned and you'll find out more about the inheritance tax. But you said supposed to retire at 75. Now, come on, what do you mean? You either retire or you don't retire. You either buy an annuity or you don't buy an annuity.
That is a very good question. Whereas every other pension, looking at the pension legislation, and you'll know from speaking to financial advisors, at age 75, if you have a normal pension, they pretty much if I use the correct word, tell you you've got to change it to annuity, because that's the official age under the legislation. However, with a SSAS, it's not like that, because you can continue, because you choose, because you are the master trustee, and therefore you can choose what you want to do. The biggest aspect around it is your connection to your sponsored employer, which is normally the limited company that you also run. So you've got to have that planning as the overall. Does that make sense?
No, it does make sense. So let's go back to inheritance tax. I mean, you say it's really efficient from an inheritance tax point of view. Am I correct in sort of thinking along the loose lines? And I've had a SSAS myself since 1996, if I got my year right. So I've had it a long time, and that's why I've sort of forgotten the exact year. But you're talking inheritance tax. Are we talking because you don't own the property, your limited company doesn't own it, and this pension is effectively a trust wrapper around the property, that it can pass generationally via this wrapper?
Absolutely, and this is why you have to educate your beneficiaries, which tends to be your children, about how to use this, because provided they are members, and you put them as the beneficiaries, they can get that wealth within that wrapper, and there's some implications if they don't have the understanding how to receive that money, depending on your age. But if you educate them wisely, it will be tax-free unless they take it out of this wrapper. And so this is so huge, because we know what inheritance tax is, the dreaded tax, 40%. So this is outside your estate. So you don't have to, like you do with limited companies, what we've probably seen, where we have to set up family investment companies and do some complex stuff. You don't have to do it with this. So because this is already outside your estate. That is the big benefit, and it's huge.
Now, you've mentioned an interesting point there, limited companies.
Yeah.
Some people buy their commercial property in limited companies, some buy it in LLPs, and some buy it in SSAS. Why would I have three choices? And I could also buy it in my own name.
And a partnership, normal, traditional, general partnership. This guy loves value, and this is the big value why you need to come and see potentially a specialist property tax advisor, because the answer changes, Andrew, depending on what you're doing, because sometimes LLPs can be quite beneficial, sometimes limited companies can be, and sometimes SSAS pensions can be, and you have to choose what is the right variables for your particular deal. That's why you need advice up front. And the reason why Andrew raises is because I raised this up on the commercial property mastermind, and we always try to help each other and give value to each other. So obviously my background is from the accountancy, tax and business advisory background, and we try to help other masterminders who have different expertise, and this is a good way of communicating, because the different benefits vary depending on what the property and what the attributes are. And obviously the VAT is quite important in this part as well.
Well, we won't do VAT in this video, but if you're liking it, make sure you do smash subscribe and hit the bell icon, and you'll be the first to find out about that VAT video when we release that one. So see, coming back to the all-important SSASs, because I've sort of took us off down a little bit of a rat hole there with limited companies and LLPs, and we know there's a bit of benefit there. If you want to know a bit more about that benefit, drop us a comment below and we will help you by recording a video, but only if you ask us. So see, SSASs, we've talked a little bit about the inheritance tax and how it can be beneficial. We've talked about the structure of the fact that you don't have to necessarily retire at the age of 75, and you've touched very briefly on 1,078,000 being your lifetime allowance for tax relievable.
1,072,000, but it doesn't matter, it's about that round.
Loose change between friends.
Love it, love it, love it, love it.
So what happens? I mean, this is, I deposit £1 million worth of commercial property, and it's generating annual revenues, and I want to keep contributing into my pension scheme. What happens at this point?
This is the amazing question, and this is, I could go on forever. I'm going to try to summarize some of the benefits, because there is a lot.
Focus for the audience.
There is a lot. So what Andrew's mentioning, if I put it in my SSAS, when it receives the rent, whether it's not subject to income tax or corporation tax, so it gets gross rent. Number
Correct.
one benefit. Number two benefit is that if I start drawing down from the pension, obviously I have to follow the rules of drawing down. So
Absolutely.
therefore, my pension, provided it's outside the 25%, I can only then put in, currently it's 4,000 a year, not the 40,000 a year. But the beauty is, if I've done this in the pension, that's only limited to me. So my children, just to let you know, if they are carrying on contributing, they can still contribute and gross it up into the pension. But the beauty of this is that the income, unlike when I sell stocks and shares or anything else, it's going to carry on going tax-free into my because people are still paying me rent. So even though I'm drawing down, my pension balance, potentially, depending on how much I'm getting in and how much I'm drawing down, may not diminish.
Not go down.
So it's ongoing forever, isn't it? Pretty much, provided
But you
I've got
do
tenants.
have the £1,072,000, correct on that occasion, lifetime allowance. So what happens if I burst through that lifetime allowance?
So this is where you need really good tax advice and planning, and it's a combination from a tax advisor and probably a financial advisor, depending on who your power team are. Because if you've got two people, your husband and wife, obviously that's 2.2 odd million, rounded up a few pennies, right? If you've got children, it gets bigger, so you have to forecast and understand by individual whose pot are you within the SSAS attributing to. The flexibility of the SSAS is there to be able to allocate differently the benefits, and this is where you need to be really clever around the planning within the SSAS to get around this headache. Because Andrew raises a really good point. If you go over this, it can then, when you crystallize it, i.e. start drawing down, get hit by a hefty tax charge. As 55%. So you don't really want to be doing that. You need to get some other planning, which is possible as well, but not in the jurisdiction of this.
So what we're effectively saying here is take advice at the right point in time. And I know you certainly know your stuff on SSASs. I'm not too far behind you, but you're more expert than I. But the reason we're doing this is to plan your lifetime allowances, because although you're building up the income and you're rolling it up gross and you're making your contributions, and £1 million pension, from my last look at numbers, was worth somewhere around £40,000-50,000 worth of income per annum on retirement. That is not going to last you forever. So a lot of people in this property industry that we're in, and a lot of entrepreneurs who also have SSASs, because I set mine up when I was an entrepreneur prior to being in property, they couldn't afford to live on that level of income. And they're effectively pushing the tax bill. They're grossing up now, but pushing a tax bill down the road.
I think you've raised a really good question around what you can potentially get out of it. I would challenge the percentage of the numbers. That's if it's an annuity, is 3, 4, 5%. If you've got gross rental, it's quite common that you get even anything up to 10%. So that means you're getting 100,000 for your $1 million, which you can then draw down because you've gone past the lifetime, and it can be split, and you can split it across two people, if you're husband and wife. So therefore you're pulling it tax efficiently out. The other bit, which I really want to touch on really big, is how do we get to the £1 million? Because that's what people are going to ask us, right?
Absolutely.
That's the big one.
The
big one is, if I've got a trading business, I can do something called a loan back. And this is huge. And check one of the videos on my YouTube channel that explains a bit more about a loan back.
We'll put a link to that video just here for you to follow.
And we will talk a bit about it, because you can do up to 50% and loan that back to your limited company. So you can buy, believe it or not, property residential in a limited company. So you can actually have your limited company growing and your SSAS pension, because they both have are two different entities. You can charge interest, so you save corporation tax. So let's say I lend, let's make it easy number. Let's say I've got $1 million and I'm lending 50%, $500,000. I could charge up to market rates, which are anything 1% over the base up to even 10%, depending I've got comparators. So let's say it's 10%. So I'm charging 50,000 to my limited company to have that money. That's saving corporation tax in the limited company because it's an
Absolutely.
expense. That money now is going into my SSAS, and the SSAS is getting that tax free because it doesn't pay no tax.
Exactly.
So now we're building our wealth, because a lot of people ask, is the SSAS single or one-dimensional? It's not. It's multi-dimensional. So you use it as one of your tools within your whole framework, and that's why we're doing this video, because people don't know about this fund. And
Yeah.
obviously me and Andrew do.
Well, I think you've raised a good point there about the SSAS lending money to the company. Now, let me just turn this around the other way. The SSAS wants to buy a property. It's got 500,000 in the bank, and the property's worth £1 million. Can the SSAS borrow money?
Absolutely yes, and this is the beauty, because a SSAS can borrow 50% of whatever money it's got. So if it's got £500,000, it can actually borrow £250,000, either from the bank, but since you are the bank and you've got potential cash yourself, you can lend money either as an individual or from your limited company into the SSAS. Now it's got buying power of £750,000. And this is the beauty, and you can charge its interest. So people say, I can't touch my pension money, it's not an investment fund. Sorry, but it is, because I can get money from the SSAS in a number of different ways. And we probably haven't touched another benefit, is it can actually own shares in some of your companies due to different requirements. So there is so much planning tools, and Andrew's smiling because he's like, Z, this ain't even on the script, you're going into different areas. But the reason why is I'm so passionate, so is Andrew, because we love helping property entrepreneurs, trying to maximize that journey.
Well, Z, I mean, looking at this a different way, I mean, we're both commercial property investors. We like to acquire commercial property. Now, let me pose the question for you to help the audience understand this. You buy a property, and it's a shop, it's got vacant upstairs, you want to convert the upstairs to create 2 flats and make the shop smaller, perhaps make 2 shops or a flat at the back of the shop. So we're going to be left with commercial property and 2, 3 more flats. The scenario here is, should I buy that in my SSAS? Should I buy it in my own name? Should I buy it in a limited company? Because surely it's commercial now and the shop will still remain commercial, so surely I should just buy it in my SSAS. Or would you think of a different way of doing it?
That is the $64,000 or $1 million, whatever you want to call it, very important. Do not get caught out, because there's something called taxable property, and our friends at HMRC, I'm always polite to them, will call that a 70% potential tax charge if you bought that in the SSAS, because you can't own residential property directly in the SSAS. So this is why you need a property tax advisor who understands SSAS pensions to structure this for you. It could potentially be that you buy it in a limited company or LLP. The limited company may be preferential if you want, because you could do the loan back to get the financing in the limited company and then buy it. And what you could do is, when you buy the freehold, then you split it, and then you could sell the lease potentially to your pension for the commercial, and keep the residential in the SPV, limited company, that's called a special purpose vehicle, just a fancy name for a limited company that owns property. So you could do it that way. You could even do it in a smarter way, where you could use all 3 structures, such as LLP, limited company, and SSAS. I think I did a little bit a bit on the commercial mastermind property thing that we're on. If you ever see that, you'll understand what I'm talking about. It really depends on what is available when you buy the property and what makes commercial and tax sense.
So what we're saying is, don't buy a commercial property that you have an intention to convert into residential in your SSAS. Now, something which I think is quite smart, and I'll sort of, you can add to this here, is if you were to buy a property, you were to convert parts of it, you could sell the commercial property to your SSAS after you've title split and split off that element, and take cash out of your pension and take profit out of your pension by doing it that way. Would that be quite smart, or would you think there's a better way of doing things?
That could be really smart, especially after you used, we're not going to cover on here, something called capital allowances. After you use the benefit, because there's special rules around that without getting into all the technical side. So depending on your circumstances, there will be a point when it makes commercial sense to move the asset of the leasehold of the commercial from your limited company, in this case, to the SSAS pension. This is why you need someone who knows all the different implications and they can plan that journey, because ultimately what we're trying to achieve is financial freedom. This is what it's all about, right?
Absolutely.
And these are tools, amazing tools. I call them sexy tools. This is how sexy it gets on this, personally. God, Andrew.
See, well, you raised a very valid point there. Now, we're not going to cover capital allowances in this video, but if you do want to hear about capital allowances, put capital allowances in the topic line below and post your question, what you want to know about capital allowances, and we'll cover that in a future video. So Z, the property itself, we've bought it, we've tenanted it, we've sold it to our SSAS. Do we need to sell it in the future to retire, or is there a way of keeping this property portfolio as a legacy?
That is another, Andrew's on fire. He wants to get maximum value for you, the LinkedIn family and YouTube audience on this. And I'm telling you, he's getting value, because that's an exit strategy question. Because you've got a couple of options here. One, if you exit and you want to liquidate the cash, you can do. And what happens then? Our friends, the SSAS pensions, doesn't have something called capital gains tax. So when I bought it for $500,000 and now it's worth $1 million, normally I'll be paying probably 10-20% if it's commercial, capital gains tax if it was in my own name, or corporation tax, whatever the rate is at that time. There's none of that in the SSAS, so I'll get the rest, $500,000 tax free. That saved you probably about 100 grand in your pocket, just that. Or I just carry on and I put my children on it, and then I do the legacy planning, because if they understand this, and it's all about how we educate the future generations, if that is one of our objectives, we educate them, make them understand how to be a trustee of a master trust such as a SSAS pension, and then they get the benefit, and that builds and accrues until their numbers are done. It's huge, isn't it?
Absolutely. So what we're, to summarise, you can either sell and sell tax free, or you can bring your legacy, your children, into the SSAS, and they can carry this on in perpetuity. Now, I did have a great question. We'll edit this little bit because I
love this. Everyone loves the bloopers, because Andrew is by the way, he's so humble. He's a maestro on YouTube, and he's way more experienced than me, and I love talking to people more experienced. He'll probably do the like and comment, but you want the blooper, which you're going to want, like and comment at that part.
Thank you, Z.
I think for us, I think that's quite a lot of value on this video, and we will do more because there is so many variables, and it shows you why you need a switched on entrepreneurs, a good power team, or someone who is energized in you, like Andrew, who's got unbelievable amount of knowledge of running businesses, especially property businesses. Someone like myself who's got not as much knowledge on as Andrew in some of the property aspects and the general things, but got good knowledge around tax, because we never even mentioned stamp duty, land tax, another fun area.
That's another big segment.
Yeah, it depends on how you do it, but there is a lot of fun around leasebacks and things like this. So really important. If you have enjoyed this, please do, as Andrew mentioned a few times, like and comment, and ask us anything we want. Smash and subscribe, and this will be on mutual channels. But I think that's enough for us.
Well, what I would sort of say, Z, is if the audience have got questions, having watched this, post them below, and we will do a follow-up video answering your questions, because only when you post your questions do we know what future content you require. So make sure you smash the subscribe, hit the like button. Just tell Z that the video was actually quite good. If you're watching it on LinkedIn, hit the love heart. LinkedIn loves love hearts, and so does Z.
Love it.
But for today, it's thank you from me, Andrew Roberts.
Thank you from me, Z, Razak, on all this fun that we've had, and I'm looking forward to the next one. Love having this guy in. He knows how to get all the value out for you, the audience.
Thank you.
Thank you.